Saylor posting that, guys, this is time to be buying in the orange zone. But
if you don't trust anybody, you buy Bitcoin.
Buy Bitcoin. Buy Bitcoin. Buy Bitcoin. Buy Bitcoin. Buy Bitcoin.
how much strategy does it involve?
So the strategy is very, very simple, which is that we believe that Bitcoin is digital capital and it's the best way of preserving value into the future. It's the best store of value out there.
What happens when, let's say, we have 4 or 5 organizations on Wall Street holding maximum Bitcoin? I mean, how does that impact the investors' sentiment? How does it impact the price?
Yeah, I think increasing investor demand for Bitcoin from large institutions and large corporations like Strategy is a good thing for the Bitcoin network and for the larger crypto community as well. Because what's happening is that there's all of this capital in the world that's stuck in traditional capital markets. They can only invest in equity, they can only invest in bonds, they can only invest in credit instruments. They can't go and buy Bitcoin directly. And for Bitcoin to actually become the bedrock of the new financial system, which is something we all dream about 50 years from now, 30 years from now, it has to basically suck in all of this capital from all of these different pools of capital globally that is stuck in different asset classes. And that's only possible when corporations like Strategy come in and securitize that Bitcoin in some sense and offer the performance of Bitcoin to those investors in the instruments that are accessible to them.
As a retail investors who started their journey with crypto, what should I buy actually? Should I buy MSTR or shall I actually buy Bitcoin?
So
hello, hi everyone. Welcome to yet another episode of Voice of Web3 powered by CoinGape News. Guys, crypto right now is all about adoption, institutional adoption, DATs, ETFs, and all sorts of information we are getting about from Wall Street about how crypto is finally getting mainstream. And when we talk about institutional adoption, one company or one brand we all are hearing for the last 2-3 years is MicroStrategy. Was recently renamed to Strategy. Today we are very lucky, guys, and we have somebody from Strategy who has been working there, specifically focusing on Bitcoin strategy. And today our guest is Chaitanya, who is working with Strategy, of course, one of the most influential companies driving Bitcoin adoption globally. Strategy, under the leadership of Michael Saylor, as you all know, pioneered the corporate Bitcoin treasury part, which we call now DATs. And Chaitanya is somebody who has been closely involved in the company's digital asset initiatives. And he brings a very unique perspective when it comes to how institutions, how capital markets, and corporate treasuries are increasingly integrating Bitcoin. And he is the right person who can give us a bit more kind of a drill down version that how and exactly where Bitcoin is getting integrated in this whole financial ecosystem, which we talk about, which we discuss about. So as retail investors, as institutional investors, I'm sure Chaitanya will be able to add a lot of value to us. Chaitanya, I'm going to call you CJ. Welcome to Voice of Web3. How are you?
thank you for having me, Sunil. It's great to be here. I am happy to know that you can pronounce my name well, but most people do not, so that's why I go by CJ. But it's great to be here. Excited to have this chat with you.
So, CJ, I mean, of course, we will go down to questions. We will discuss a lot about financial things. We will discuss about institutional adoption. But before that, I see there is an interesting story that how did you reach Strategy, Because to be frank, it's quite unconventional at the moment, because I am sure you must have been exploring other opportunities. So, CJ, why Strategy and how did you land there?
Sure. The reason I'm here at Strategy is because I initially fell down the Bitcoin rabbit hole in the last bull run in 2021, 2022. And at the time, I was working in finance, in private equity at Blackstone in India. And over time, I was getting obsessed with Bitcoin, like most people do. I became a Bitcoin maximalist. And I wanted to start my own, let's say, Bitcoin journey or Bitcoin venture in India. But I applied to business schools in the US and got lucky through that whole process, got into Harvard Business School, and I was actually conflicted about going or not going. And my parents convinced me to go, which I think was the right decision. And I came to the US, and I was convinced that the only thing that will make me stay back in the US in terms of a career after business school would be something in Bitcoin. And at the time, in 2023, 2024, the biggest story in all of Bitcoin was strategy. It was a category of one. No one else was doing what strategy was doing. And that became like the dream job, dream company. I was obviously very familiar with the company and the strategy, was very familiar with Michael Saylor. Found out that the person running the Bitcoin activities day to day at strategy, his name is Shirish Jajodia, happened to also be from India, from the same university as me. So I just reached out to him and started pestering him on LinkedIn to give me an internship opportunity, and said that I'll work for you for free. I'll make your life 10x easier and better. And I have a deep passion for Bitcoin. I have the expertise in finance. And then started messaging Fong and Andrew, the CEO and CFO. They describe it as me cyber stalking them. But over time, they gave in. They allowed me to speak with them. I spoke with Shirish a couple of times. And fortunately, right place, right time, they were able to create an internship opening for me. I joined the team in the summer of 2024, 2 years ago, as an intern. It went very, very well. I continued and stayed part-time as an intern through the second year of my MBA, and then joined full-time after I graduated, which was in the summer last year. So I've been here close to a year full-time, and then I did it as an intern for a year before that. But that's the story and the journey.
Yeah, I mean, it's an interesting story because everybody right now dreams of being working at these companies like Strategy, Coinbase. I mean, right now, I think actually at the edge of these markets, new markets coming up. So Chaitanya, I mean, your role describes you as somebody Bitcoin strategist, right? If you can help us all understand, what does this Bitcoin strategist actually do? What it means actually.
Sure. So I'm part of the finance team. It's a
Mm.
small team of just about 5 people on the Bitcoin side in the finance team. Then another 5 people in the legal team, and 5 people, let's say, across important functions like tax and accounting and reporting, and then the management team. So overall, it's a very small team of 15 to 20 people. Uh, as part of the finance team, as part of someone who's working on Bitcoin strategy, I effectively work with the management team across all things related to the Bitcoin activities that we do. That is including all the capital market transactions. So all the IPOs we did last year with respect to the preferred equity instruments that we launched,
Mhm.
the issuance of new capital on a daily basis or weekly basis through the ATMs, then investor relations, speaking with new investors, old investors, institutional, retail, all of them, working on our earnings presentations and general investor communication.
Mhm.
Treasury management, actually buying the Bitcoin, custodying the Bitcoin, working with exchanges, working with vendors, working with custodians, and general Bitcoin advocacy, which
Mhm.
is a lot of different conferences that Michael attends, Fong attends, going with them, presenting there, helping them. And also a lot of financial theory behind some of the things that we're doing, which are very unique and innovative that not a lot of other people have done. So actually conceptualizing it, coming up with detailed models, finding a way to simplify it, present it back to investors. I also spend a lot of time in that. And over there, I have the great fortune of getting to work directly with Michael Saylor a lot, which is by far one of the most enjoyable parts of the job.
Mhm.
So yeah, that's in a nutshell, what I do as a Bitcoin strategist at Strategy.
Yeah, yeah. So, uh, CJ, whenever somebody hears about MSTR or whenever somebody hears about an update, of course, Sailor never fails to kind of give us an update every week, right? The orange kind of the VC, it's basically a hint that he's going to buy more Bitcoins, right? I mean, uh, when we see those updates on Twitter, Sailor posting that, guys, this is time to be buying in the orange zone, right? How much strategy does it involve? I mean, are these decisions backed by some form of data, some form of logics? At this point, I mean, of course, for retail investors, it's very hard to understand, that, okay, why Taylor keeps on buying Bitcoin. What does he see in Bitcoin that, let's say, many people in the industry are not seeing?
So the strategy is very, very simple, which is that we believe that Bitcoin is digital capital and it's the best way of preserving value into the future. It's the best store of value out there for reasons that the crypto community now understands very well and is very aligned on, that Bitcoin is digital capital or digital gold and is going to go up in value as currencies globally inflate away and people don't want to take counterparty risk. They want to hold something that's virtual and scarce where they don't need to trust anyone. So that adoption story will keep playing out. And if you then believe in that thesis and you believe Bitcoin is going up and appreciating faster than other assets, then the investment thesis is to buy and hold as much Bitcoin as you can, and then actually lever up on that Bitcoin and use the Bitcoin as collateral to issue credit, borrow money in a way, buy more Bitcoin, and try to outperform Bitcoin. So that's what the company is doing. And that's why MSTR, our common stock, is effectively a levered bet on Bitcoin or an amplified version of Bitcoin, which will perhaps go up then more than Bitcoin when Bitcoin goes up, and also go down more than Bitcoin when Bitcoin goes down. And when you conceptualize the strategy and become convinced that you want to keep growing in size, you want to keep buying more and more Bitcoin, and you want to keep borrowing against it, trying to outperform it, then the next question is, how do you want to communicate that to investors? And the answer is, you want to be as transparent as possible and communicate as frequently as possible. So 2 or 3 years ago, or maybe even a year and a half ago, we used to communicate our purchases on a quarterly basis. This is how much we purchased in the last quarter. This is how much we purchased in the last quarter. 3 or 4 announcements a year. And then if you were doing a large deal through some sort of financing transaction, we would announce that. But then we came to the conclusion that we can make it 10x more effective and 10x more transparent by just announcing every week. So now every Monday morning at 8 a.m., we announce the purchases for the previous week. And that means, through the course of the week, when the trading, when the markets are open in the US, we are actively raising more capital through our equity and credit instruments. We are selling more, raising more capital, continuously buying more Bitcoin with the capital we've raised. And then all of those purchases that we managed to make in a week, all of that together is announced in one shot on Monday morning, 8 a.m. every single week. And that's the reason we do it, because Bitcoin's going up forever.
Yeah, I mean, as retail investors, we all wish it happens. It keeps on happening. But I think there is a debate which has now opened. I mean, if you go back 12 months or 18 months before Trump came to presidency, I mean, it was all about choosing between cryptocurrencies. I mean, it was all about finding the best cryptocurrencies, finding the best ideas, and kind of investing them, getting it on in early stages. And then suddenly we saw these ETFs coming into the market. Then we saw these DATs coming into the market. And now there is a comparison which is being done and which is very hard to do, to be frank. I mean, as a retail investors who started their journey with crypto, it's very hard to understand what stocks are. It's very hard to understand how Wall Street works actually. And now when you see these companies kind of, accumulating such levels of crypto, you get to ask questions that, okay, I mean, what should I buy actually? Should I buy MSTR, which is a better strategy, or shall I actually buy Bitcoin and just keep it in some my cold wallet? So, I mean, from retail perspective, I mean, what's the argument here from your side? I mean, if in case somebody who's right now thinking of investing and he has access to both markets, then is it a better thing to buy MSTR versus Bitcoin? How should one kind of analyze this?
Sure, I think MSTR and Bitcoin are very different in terms of the risk reward and the value proposition. Bitcoin is digital capital where you don't need to trust anyone. And if you don't want to trust any company, any country, any group of individuals, you don't trust your own government, you just want to save value for the future, and you want to do it in the most trust minimized manner, then you want to buy Bitcoin, hold it in cold storage where you know your private keys and no one else knows it, and you can just forget about it. And in 5 years, you will probably outperform every other asset class. And in 10 years, you'll be so grateful that you did it. And your future generations will thank you for doing it. So that's Bitcoin. And I would encourage, all your listeners to study Bitcoin very deeply and truly understand the difference between Bitcoin and all the other crypto tokens. Because Bitcoin is the only one, in my personal opinion, which has that long-term value proposition of going up in value for 100 years. And all the other crypto tokens will fight with each other for utilities and use cases and talent and applications, and have similar risks to like typical companies do, and like typical equity investments or stocks do. So that's the difference between Bitcoin and crypto, and why Bitcoin is superior, and why people should study Bitcoin deeply and invest in Bitcoin for the long term. Then MSTR is the common stock of strategy. And when you invest in any share of any company, you take on 100 different kinds of risks associated with that company. And you need to trust the management team and trust the board to execute on their strategy, to not defraud the investors, to not have any kind of shenanigans going on internally. And if you trust strategy, and if you trust the management team, and if you want to take some excess risk because you want to try and outperform Bitcoin, then you could consider buying MSTR. And it's not investment advice, but I'm just explaining the rationale for why our current investors, both institutional and retail, buy MSTR. And that's because they believe that over the course of 5 years, or whenever you choose a long enough time period, and then you look at the performance of Bitcoin and you compare that with the performance of MSTR could outperform Bitcoin, because strategy, the company, will borrow against that Bitcoin and buy more Bitcoin. And as long as Bitcoin is appreciating faster than your cost of borrowing, all that excess return comes to the common equity investor. It's just like buying a house with mortgage. And if the house appreciates more than the cost of the mortgage, then your return actually is more than just the appreciation in the house. It's like buying stocks with margin. It's like a private equity company would borrow to buy a business and lever up. It's the same idea, that you're just trying to boost performance or amplify performance by borrowing, and you're trusting strategy to do it as opposed to doing it yourself. Because I could also buy Bitcoin, borrow against it, and try to outperform Bitcoin myself as an individual, just borrowing from someone else. But then the terms of the loan I will get will be very onerous. There'll be a lot of conditions, a lot of constraints. I can't continuously issue more and more debt to different people or to different banks. So I can't borrow a lot more very easily and keep growing it. But strategy, the company can, because the company has a lot of benefits compared to individuals, because it can access capital markets and continuously raise more capital from all these different kinds of investors at very attractive terms and rates. So that's the reason to buy MSTR if you want to outperform Bitcoin, but you can wait for 5 years. And then we've issued STRC, which I'm sure we can dive into a bit more, which is Stretch, but the ticker on NASDAQ is STRC. It's a preferred stock that trades just like MSTR trades in the market, but it's a credit instrument in some sense, which gives a fixed return of 11.5%, which can be changed month on month, but it stays stable in price, or is designed to be stable in price near $100. And the performance, the 11.5%, is being paid out in the form of monthly cash dividends. So each month you pick up cash dividends, and that sums up to 11.5% for the year. And all of those cash dividends are tax deferred. You don't pay tax as in when you receive them. Instead, your cost basis in the instrument keeps stepping down. So your cost basis keeps going down each time you pick up a dividend. And then when you sell it, you pay the capital gains tax on the differential of the selling price, which will probably be near 100, because it's designed to be stable at 100, and your reduced cost basis. And it's backed by 5x more Bitcoin on Strategy's balance sheet. So if you like Bitcoin, but you can't handle the volatility and you can't handle the risk and you can't wait for 5 years, but you do trust strategy and you do want some juice from Bitcoin's performance, and you can only have the capital for 3 months or 6 months or 12 months, you have some need for that capital in few months. Like you need to pay taxes, you need to pay payroll for your company, you just need some working capital. Then you can consider buying STRC and taking lesser risk in some sense, but still trusting the company and getting 11.5%. So that's, Bitcoin, MSTR, and even STRC.
No, thanks, Jay. I mean, CJ. I mean, this really puts what we are or what an investor is buying into perspective. What they are getting into when they're buying a Bitcoin, what they're getting into when they're considering MSTR, and what exactly STRC means for, let's say, investors. I mean, if in case I had $10, I will put equally into three of them. I think that seems to be a kind of a very layman strategy. But CJ, when we talk about leverage, when we talk about debt, anything which comes, I mean, a very natural question that comes to mind is, of course, that how much all of this is dependent on the actual price of the underlying asset. I mean, when we call this situation, let's say, for example, Bitcoin today is trading at around 70K. And if in case, worst case scenario, it comes down to 48,000 or 47,000. I mean, how much does all of this depends on price of Bitcoin? Is it actually related to it, or do we have some mechanisms or systems or strategies that are preventing us if in case such a worst case scenario comes ahead?
Sure. So
This I'm asking as an investor of MSTR now.
Yeah, as an investor of MSTR, the bet you're taking is the amplified Bitcoin bet. So if Bitcoin is falling 20%, then because of that leverage or this, preferred equity stretch instrument and other instruments we've created, MSTR may likely go down even more. And that will always be true, perhaps in the short term, that what's happened in the last 6 months since October is Bitcoin crashed from 120,000 to like $60,000-$70,000, like a 50% crash. MSTR crashed even more, 60, 70, 80%. So the basic idea is that you are taking that amplified exposure to Bitcoin, and you will see those longer or larger swings on both the upside and the downside. But yes, the long-term thesis is built on price appreciation of Bitcoin. And price appreciation over and above what the cost of the leverage is. So if we are taking money from stretch investors and offering them 11.5%, then as an MSTR investor, if you don't think that Bitcoin is appreciating more than 11.5%, then you will look at that as a very dilutive transaction and you wouldn't want to be invested in MSTR. But if you think Bitcoin is going up 20%, 30%, 40% on average per year for 10 years, then you think it's a very attractive financing transaction. And you would then want to perhaps own MSTR and capture that spread between 20% and 11% or 30% and 11%. So that's the MSTR bet. You are betting on Bitcoin appreciation over the long term. Short-term volatility is okay, but the longer-term return should be in excess of 11%. And in the short term, you are accepting wild swings. And you're also, the beauty of the strategy model is that there is no big liquidity risk or bankruptcy risk or credit risk in the short term, because all of these credit instruments that we've launched in the last year, including Stretch, they're perpetual in nature. So there is no 5-year or 10-year or 15-year maturity when I have to repay the money in cash to the people I took it from. I've borrowed it effectively forever, which is why it's preferred equity. It's equity and not debt. I don't need to suddenly sell the Bitcoin 5 years from now and repay in cash, or find money from other investors, take cash from them and then repay it to these investors. And that's the big difference and the big breakthrough in the way we are constructing this model. So as an MSTR investor, for you or for other listeners, like, the unique thing is, even if Bitcoin crashes to $10,000, like 80% drop from here, strategy still doesn't go bankrupt or doesn't have any crisis, because we don't necessarily need to repay these credit investors. We do have some convertible debt, which we are going to get rid of over time. And then our strategy will be even cleaner and even simpler. And we will remove all kinds of risks in terms of refinancing, repayment, bankruptcy. Those will all go away, and we can ride Bitcoin up and down as much as it swings.
I mean, so it's essentially basically borrowing money on perpetual contracts, and I'm sure that these are investors who actually believe in long-term bet on Bitcoin, and they're more than happy to get some part of it as a dividend through STRC. I think.
That's true, except that these investors, even if they think Bitcoin is going to go sideways or
Mhm.
just appreciate 2 or 3 or 5% per year, they would still perhaps be willing to buy STRC.
Mhm.
Because even if Bitcoin doesn't go 20-30%, the STRC investor will still get their payout, the monthly cash dividend, because strategy, the company has made that sort of commitment to those investors that even if Bitcoin is not going up 10, 20, 30%, we will still
Mhm.
give you an 11% return through monthly cash dividends. And MSTR, the common equity investors, will sort of take that burden and absorb that loss and absorb that risk and absorb that excess volatility. And if you look at the numbers on our website as well, strategy.com, it's a beautiful
Mhm.
dashboard where we lay out everything, updating in
Mhm.
real time every 15 seconds.
Mhm.
You will see that because we own $50 billion of Bitcoin roughly, and our annual cash payments to these investors are about $900 million or $1 billion, then
Mhm.
if even if Bitcoin just appreciates 2% per year forever from here on, we can keep doing this forever. We can keep paying the 11% monthly cash
Mhm.
dividends to these investors, and the business will look the same every year for 10 years, for 100 years, for 1,000 years. Nothing
Mhm.
changes. So those STRC investors don't need to bet on 10, 20, 30, 40% appreciation in Bitcoin. Even if Bitcoin's going up 0%, 2%, 5%, they're pretty much okay, because strategy will make sure that we still pay that out, and we still make sure that STRC trades in its target range near $100 and is kept, near stable at $100.
I mean, then STRC in that case, if I'm understanding correctly, becomes a very confident hedge against both MSTR and Bitcoin. So
Yeah.
so if in case I am, let's say, I'm exposed to either Bitcoin or MSTR, I can always kind of buy some STRC to balance out my risk. I mean, this is brilliant. This is good.
So there are different kinds of investors that like STRC for various reasons. And one reason is what you just described, that they might
Mhm.
have been very aggressively been allocated to
Mhm.
Bitcoin, MSTR, and high risk crypto equities, crypto tokens.
Mhm.
And then they want to step down that risk and they want something that's a bit more defensive,
Mhm.
and they don't want a lot of volatility in that part of their portfolio, and they still want good return. So they don't want to keep it in a bank account earning 1%, or they don't want to put it in a debt fund or a money market fund earning 3 or 4%.
Mhm.
Then they will find STRC interesting. And that is for crypto investors that want less risk. But then there are
Mhm.
traditional investors that think crypto is too risky and Bitcoin is too risky, and they will never buy it because they can't wait for 5 years and they can't handle the volatility to make money eventually. So then they will think STRC is also risky, but it's much less riskier than everything in the crypto world. And then
Mhm.
they will make STRC perhaps the aggressive, risky part of their portfolio,
Mhm.
where it's still very attractive because it's designed to be stable in price, but that 11.5% return is
Mhm.
far in excess of most other investments in the credit world or fixed income world. It's more
Mhm.
than fixed deposits, it's more than savings accounts, it's more than, as I was saying, debt funds. It's very different risk as well. So you have to always, think about the risk and think about the downside and understand that you're basically trusting the management team of strategy to
Mhm.
keep paying out that cash dividend and to make the price sort of be designed to stay at stable at 100, like continue to do that. But that's the idea of like who will find STRC interesting as an investment.
Yeah, I mean, if in case somebody is hedging against Bitcoin, they will of course go to stable coins, USDT or USDC, but they don't pay you 11.5%. They don't pay you that much. I mean, right
And
now the max you can get is 1.2 or maybe 1.1% around on various exchanges where if you kind of lock or stake your stable coins. But that's the max you get right now. Or if you take more risk and you go to platforms like Aave where you involve in lending and borrowing, which is always kind of vulnerable to attacks, always vulnerable to hackings and everything. So I mean, yeah, I mean, if you ask me, I see this as a brilliant strategy where actually, if in case I feel not very confident about Bitcoin price, I can always go back to STRC and likewise, vice versa. This is good. This is brilliant. I
Yeah,
think not many
exactly.
people know about STRC, to be frank. They
Yeah,
think
and that's
STRC as just another kind of a side product from MSTR, and yeah, but they don't know these. Of course, the tax. You were saying something about tax as well, right? I mean,
yeah,
can
the
you just
unique.
elaborate on that a bit more?
So the unique structure here is we or let's discuss traditional instruments first. If you,
Mhm.
let's say, buy a typical bond issued by the government or issued by other corporates, and you pick up income from
Mhm.
that bond investment, then that's taxed as ordinary income, and you pay
Yes,
ordinary
yes,
income
yes,
tax on
yes,
it.
yes.
If you buy equity and equity gives you a dividend, that's
Mhm.
typically treated as qualified dividends, and you
Mhm.
pay capital gains tax,
Capital
short term,
gains.
long term, but like you pay capital gains tax.
Mhm.
And STRC is an equity instrument, it's preferred equity,
Mhm.
and it's a dividend that we are paying out in some sense. But because strategy, the company itself, does not have taxable earnings,
Mhm.
because we don't sell the Bitcoin and
Mhm.
recognize
Right.
capital gains,
Uh-huh.
then the dividends given out by the company are not treated actually as dividends. They get treated
Oh.
as return of capital. You're
Mhm.
literally
So
returning the capital.
they
So
are
for
more
you,
like part of the expense for the company.
in some sense, you can call it expense, or the better way of thinking of it is that if I actually took, let's say, I'm not talking about
Mhm.
strategy anymore, but a hypothetical company, I start a company, I take $100 from investors, and now I just
Mhm.
return $10 to the investors. I'm just returning capital. So
Mhm.
when I'm returning capital to you, who had given me $100 as an investment in my company, now
Mhm.
when I return the $10 is not considered a dividend to you. It's instead just in tax
Mhm.
accounting, it's being considered that your initial investment itself, the cost of that is being cut by $10. So now your investment is just considered to be $90 in the business.
Mhm.
And when you exit fully, and when I actually give you the, you know, let's say you don't exit, let's say I keep giving you $10 back again and again, again and again, then you
Mhm.
keep taking the entire $10, you pay no tax, it's not treated as a dividend, it's just treated as return of capital, ROC, return of capital. And your investment keeps stepping down in basis from
Mhm.
$100 to 90 to 80 to 70 to 60, every $10 I keep giving back to you up until it hits zero. And then when it hits zero, that time there's no more cost basis to remove, so then you pay
Mhm.
tax as and when you go. And if any time in this you decide to sell, you sell the investment to someone else in the open market, and let's say you sell it for $100, because let's say $100 was the fair value, and
Mhm.
let's say you had picked up 5 years of $10, $10, $10. Now you sell it $100, and your basis had stepped down to $50. So now in tax world, your
Mhm.
capital gains will be 100 minus 50, $50, and then you pay tax then 5 years later when you sell it. So you don't pay tax as and when you go and as and when you receive dividends. You
Mhm.
only pay tax when you decide to sell, or when your basis has stepped down all the way to zero. And this
Mhm.
is because strategy does not have taxable earnings. So it's being treated as return of capital instead of being treated as a dividend. And the reason it's this is because strategy is not selling the Bitcoin we hold and capturing capital gains and creating taxable earnings. So it's not something we intentionally solved for. That's the, amusing
Mhm.
thing. We were just trying to find the best way to take leverage and to borrow money in some sense. And then when we decided to do it through equity and we decided to give them dividends instead of interest on a bond, then
Mhm.
this unique thing we've just happened to realize that this is how it's working. It was just like purely incidental. And
Mhm.
and now we are like, wow, this is like the most beautiful thing. And it's so good for investors because then they get to keep all the cash on day one and then defer the taxes into the future.
So, I mean, as see, first of all, I really feel that there is a lack of understanding in people. I mean, because these concepts around finance is not that natural for people. People don't understand them that easily. I know a bit about finance. You are a finance professional, so it's very easy for us to understand and grab them. But I'm sure as we progress ahead, I mean, crypto already is doing a wonderful job of kind of providing this literacy around finance. One of the best things I love about crypto is that once you get into crypto, you can learn more than an MBA, within few months, because you will have to go through all of these things: trading, investment, long-term investment, short-term investment. Everything is thrown at once through you, and if you can carry on, then you will learn a lot in 3 or 4 months. But I'm sure as the time progresses, and as we have more and more people who trust Bitcoin and who take keen interest in what is happening on Wall Street, they will kind of understand that what STRC is, what MSTR is, and what Bitcoin is. Because right now there is a lot of lack of knowledge, I can tell you from my experience. People don't know what MSTR is, what STRC is, and what Bitcoin is. But thanks a lot, CJ. This was amazing. Even I have learned a lot in last 15 minutes, and I'm sure whosoever will be listening this, they will also understand this. And now this seems to be the product only. I mean, when Saylor says that we're not going to sell Bitcoin, I mean, this is kind of inbuilt in the product itself, if I'm not wrong, that not selling Bitcoin is the product.
Yeah, I mean, that's always been the strategy. And that's going to be the strategy going forward as well, that we just keep raising more and more capital, buying more and more Bitcoin. And we'll primarily raise capital from STRC and MSTR. And we'll keep giving STRC investors their 11.5% or whatever the dividend rate is at the end of the month. And I don't know if we discussed that, but that's another nuance, that we keep the price stable, or we try to keep the price stable at $100 by moving the dividend rate up or down at the end of each month. So if the price is falling and the price is and demand is low, then we increase the dividend rate and bring the demand back and increase the price and bring it back to 100. And if the price is going above 100, then we can, in theory, reduce the dividend, or we can just issue more shares. So if we reduce the dividend, we reduce demand. And if we issue more shares, we increase supply. But we basically try to balance demand and supply and bring it back to 100. So that's our commitment to investors, that we'll keep raising more capital. We'll make sure that STRC trades near its target range, and we'll do everything we can in order to make that happen. And we won't sell the Bitcoin. And we will stay long Bitcoin and only Bitcoin. And we won't create unnecessary confusion or lack of transparency. And we just have a very clean, simple, levered, long Bitcoin strategy. And we just keep doing it forever. And nothing needs to change. And this business can become from $50 billion to a $500 billion to a $5 trillion to, in theory, even a $50 trillion business in the next 10, 20, 50 years.
CJ, there is one more concern that, we are hearing a lot when we kind of go to these channels on Reddit and other places, where actually we debate a lot about MSTR. We debate a lot about what is happening on Wall Street, and you get a chance to hear what both sides are saying. And one of the key discussions is that there is a race now to accumulate and become the largest holder. So, for example, Bitmain, Sharplink, they are racing to become the largest holder for Ethereum. Strategy is already the largest, and Strategy is kind of trying to accumulate as much of Bitcoin as possible. And now, I mean, in a perfect world, if let's say Strategy is the largest holder of Bitcoin, and we see that, let's say, top 5 companies or organizations on Wall Street are now holding the major supply of Bitcoin. I mean, how does that impact the investor sentiment? How does it impact the price? Have you guys thought about it, that what happens when, let's say, we have 4 or 5 organizations on Wall Street holding maximum Bitcoin?
Yeah, I think increasing investor demand for Bitcoin from large institutions and large corporations like Strategy is a good thing for the Bitcoin network and for the larger crypto community as well. Because what's happening is that there's all of this capital in the world that's stuck in traditional capital markets. They can only invest in equity, they can only invest in bonds, they can only invest in credit instruments. They can't go and buy Bitcoin directly. And for Bitcoin to actually become the bedrock of the new financial system, which is something we all dream about 50 years from now, 30 years from now, it has to basically suck in all of this capital from all of these different pools of capital globally that are stuck in different asset classes. And that's only possible when corporations like Strategy come in and securitize that Bitcoin in some sense and offer the performance of Bitcoin to those investors in the instruments that are accessible to them. And the more we do this, the more capital we suck into Bitcoin, the more the price of Bitcoin goes up, And the more every single holder of Bitcoin benefits, and word of mouth marketing of Bitcoin improves, and it brings in more awareness, it brings in more people that are currently on the margin, and it just strengthens the ecosystem. And the other thing to understand about these institutions or corporations that are, let's say, accumulating more Bitcoin is that their end shareholders are still retail investors, are still a lot of different individuals scattered all over the world. At Strategy, we did this analysis last year. We have about 55 million individuals that are end beneficiaries of MSTR through either directly holding the stock or being investors in ETFs that hold the stock. And that's the wide benefit that everyone gets because of institutions coming in, buying more Bitcoin, powering the network up, driving the price up, and just helping adoption at a large scale and pushing the industry forward. So I think overall it's extremely positive, and every individual that's been an investor in Bitcoin for a long term will appreciate the sucking in of capital and the appreciation in price.
Yeah, I mean, so I was in discussion with recently with SharpLink CIO Matthew as well, and they shared with us their plans that how they are even trying to now support the ecosystem. They are also actively now investing in the startups, in the communities that are actually trying to expand the use cases of Ethereum, and in a way that will help again the perception that okay, if a company is holding Ethereum and if you're betting on that company or management, then that is actually actively invested in the ecosystem as well. So does MicroStrategy, or strategy as we call it now, also has plans to do the similar thing? I mean, are you planning to invest in the ecosystem as well, support startups? Are there any plans around it as well?
So we believe that the best thing we can do for the Bitcoin ecosystem is to buy more Bitcoin, hold the Bitcoin, and issue credit against it, like we are doing through Stretch, and buy more Bitcoin, and again drive more price appreciation. And we think if we go out and start investing capital into 10 or 100 or 1,000 different startups that are trying to build in the Bitcoin ecosystem, then we actually just create more confusion and anxiety for our investors in MSTR or STRC. And now they need to do a lot more work to understand what is the risk, what is the possible performance, and it just kind of makes the whole business model a bit more opaque and a bit less easy to understand and decipher. So that's why we've not gone down that path, and we'd still try to support the ecosystem in other ways. So at our headquarters here in Tysons, Virginia, which is just next to Washington, DC, we have started a Bitcoin innovation hub, which is kind of a co-working space where we invite entrepreneurs in the region to come and work out of. It might be because they're working on their own startup, or they're working in other Bitcoin startups or crypto startups, and they just want to, have a community on ground. And we've been doing that for over a year now. We have about 30 to 40 different entrepreneurs that are part of that hub, and we try to host a lot of local events. We try to partner with other Bitcoin groups and host different sessions to grow more awareness. Michael Saylor and Fong, our CEO, they've been on the road for so long, for 5 years, going to different conferences and events and speaking about Bitcoin. So that's a way of sort of giving back to the community and participating in the ecosystem. But in terms of the actual money and capital we raise, we think the best use is just to buy more Bitcoin, sit on the Bitcoin, and Bitcoin will appreciate 30%. And that's the bet we want to take, and that's the bet our investors want us to make.
Right. I mean, keep it simple and straight. Okay.
Exactly. The more you do, the more confusion you create, the harder the business model becomes to understand, which means it's less attractive, which means the price is lower, which further then just deteriorates the attractiveness of the business model, and it just breaks everything. So the simpler, the cleaner, the easier it is, it's always going to be better. Like less is more.
So CJ, I mean, first of all, as I said, I mean, this is quite wonderful. Questions that you're answering, and the way I think strategy is handling, I have more respect for it. than I had in the beginning of the podcast. So thanks a lot. Uh, TJ, now we will move to the section, where we have to discuss Bitcoin in particular, okay, and Bitcoin as an investment, because a lot of people who are hearing this podcast, they will be trying to understand your uh, opinions and your thought process, that how you are seeing the whole geopolitics space playing out right now. And of course, it is becoming more harder for investors to actually kind of, be certain about anything now. And in the last 6 months, what we have seen is that it is becoming quite difficult for crypto. I mean, the event on 10th of October was a flush out, total flush out. I mean, billions were wiped out, and most of these were retail investors who were invested in one or the other cryptocurrency, not only even Bitcoin. And since then, we haven't seen the same level of engagement from the retail side. So, first of all, I would like to know your opinions, that where you see retail participation. Do you really see it coming back, or do you also think that the event that took place on 10th of October, it was actually quite, vibrant? I mean, it was quite destructive in terms of destroying the trust of investors in crypto, particularly. And secondly, how do you see this playing out? I mean, this year. I mean, we definitely have a few bills there which are yet to be passed. We do have an election as well coming up in November, midterm election in US, and we still have this war going on. I mean, so as an investor, how you are looking at these things? I mean, in crypto.
Sure. So I think it's very hard to pinpoint different reasons for why the price moves, or understand the price action historically or going forward, and making very smart, thoughtful bets on what's going to happen 3 months, 6 months, 12 months out is always going to be very, very, very difficult. But my view is that what happened on 10th October, as you were highlighting, is it was a tough time for the crypto industry. Different market makers got caught offside when sentiment suddenly flipped and the price crashed. And that created these cascading liquidations when all of these other cryptos then started crashing because this market maker is forced to sell, and then everyone down the chain is being forced to sell, whoever is borrowed against their crypto and taken leverage. And that's always happened throughout the history of crypto and Bitcoin, that when sentiment shifts and when leverage has built up, then you have that unwinding of leverage on the way down, and the price just crashes and crashes and crashes until you've had all liquidations and everyone's all the leverage is being flushed out and then it consolidates and it builds from a new base. And I think that happened this time, and that's happened before, and now we are building that base, and the leverage, I think, all gotten flushed out, and we'll recover from here. And the geopolitical issues in the world today, which seem to be escalating, will create a lot more fear and anxiety, and it can work in both ways. What happens is Bitcoin sometimes gets coupled with gold, and it gets highly correlated to gold, and it trades like gold. Sometimes it decouples, and sometimes it gets correlated to tech stocks, and sometimes it then decouples, and then it gets correlated to long-term or long duration treasury bonds, and then it decouples. And sometimes it's just the rest of the crypto industry, and then something happens in the crypto industry and then gets coupled to it and then gets decoupled. So I think it's very hard to understand what happens with Bitcoin especially, and the rest of crypto, as these different events unfold. But as long as you have a long-term horizon of 5 years or more, and you believe in the store of value thesis of Bitcoin, then I think you don't really have any reason to worry. There's nothing that's changed in the underlying thesis of Bitcoin, and it's not changed in the last 10 years. It's probably not going to change in the next 10 years. And as long as awareness keeps growing and adoption will follow, then price will follow, and you will keep going through these, building up of leverage, crashing of leverage, building up of leverage, crashing of leverage, and maybe that volatility will come down and each crash will become lesser and lesser as there's more institutions in the space, more long-term holders. They dampen the volatility because then the crash is not that hard. And I think that is what I see as the future of Bitcoin, that sometimes it gets coupled to different asset classes and gets correlated to them, and then it decouples. But the long-term trend is very clear. It's just going to appreciate 20, 30, 40%, and it's going to outperform all the other asset classes. And it's going to be much better than the S&P 500 or the stock market in the US, which is thought of as like the the main benchmark to outperform. So that's where my sort of long-term bullishness on Bitcoin is. Yeah. So I hope I answered your question.
Yeah, you did. So CJ, still, we have to ask you because this is a common question we ask to every guest, and the question is, of course, that what is your price prediction for Bitcoin in 2026?
Yeah, there is no price prediction. I hope I had one. And I have personally always had, in my head some bullish, optimistic price predictions for myself, which I don't necessarily share publicly. And I was so terribly wrong in 2025 because I thought the high would be much higher.
Yeah,
And
yeah.
then we crashed in October or November. And then I thought the low will not be that low because we barely made a new
Mm,
massive sort of bull run. And
mhm,
then the low was much lower than I thought it would be. So it just goes to show you that short-term price predictions are, at least for me, it's like taught me that it's always going to be impossible, and no
mhm,
one knows where Bitcoin is going. And it could be flat, it could be 2x, it could be half. Uh, I have no clue. All I know is that we are confident at strategy that STRC has
mm,
found some sort of product market fit. There is a lot of demand for it,
mm,
and it's a new form of capital that's now investing in STRC that had
mm,
never earlier touched Bitcoin, MSTR, or crypto, because it's a very different kind of risk reward profile for that
mm,
instrument. So if that instrument catches on more and more from here, which we think it will, lot of new demand will come in. We will take all that new demand and new capital and buy Bitcoin with it, which will
mm,
then in turn, in theory, drive the price of Bitcoin up
mm,
and make the entire strategy ecosystem look more attractive, because MSTR will look more attractive. We'll issue
mm,
more MSTR, buy more Bitcoin. That will make STRC look more attractive because it'll become less risky if there's more MSTR buffer there. And
mm,
then we'll issue more STRC, buy more Bitcoin. All of this will send Bitcoin's price up, which will then again make MSTR and STRC more attractive. So it's all like very positive feedback loop that has very little delay. It's all
mm,
synced very quickly,
mm,
and it can just expand massively. So my bullishness in 2026 comes from more of what I am seeing internally at strategy and what I'm seeing with investors. And I really think this can take off very massively. And just how strategy became a big story 5 years ago when strategy was initially
mm,
buying Bitcoin, I think STRC will by itself become a very big story. And just that one instrument will allow us to raise billions and billions, and like it'll go from being $3-4 billion today in size, STRC, to
mm.
maybe 30-40 billion dollars in size 1 year or 2 years from now. All of that capital will be driving the price of Bitcoin up. So that's my sort of view for the next 1 to 2 years.
Yeah, I mean, STRC definitely, I believe that it is quite a good product for serious money. I mean, when you talk to HNIs or when you talk to these family businesses, you do see a certain risk aversiveness. You do want to give them something where they can do some, real time hedges. And there I see if they are taking risk on MSTR and they are hedging it using STRC, I do see it's a good play here. But CJ, thanks a lot. This was quite a masterclass when it comes to what MSTR strategy is and how you guys are playing this playbook. And by now, I know this is quite unique. I mean, if somebody is even trying to replicate it at this scale, it is not going to be easy. So congratulations to you guys. I mean, this is amazing. And CJ, again, thanks a lot. This was quite innovative. I mean, personally, I have enjoyed this talk and I've learned a lot. And I've tried my level best to share it to as many as people possible.
So thank you so much for having me, Sunil. I really enjoyed chatting with you. I can talk about Bitcoin strategy, MSTR, STRC endlessly. So I appreciate you inviting me and giving me this opportunity. I hope you and your listeners would, enjoy this, have me back on sometime. I would love to share, updates few months from now.
Mhm.
But yeah, thank you. And yeah, have a nice day.
You too, CJ. Thank you.